Hey everybody, good weekend. Here is your weekend market minute for Saturday, the 6th of January. What I'm looking at here is the monthly, weekly, and daily charts of the S&P 500. So what we've seen over the past 9 or 10 weeks or so here has been this massive 700-point move, which has brought us from the edge of the abyss back in late October into very, very close to new all-time highs on the S&P 500. So what's going to happen next? Well, we have a little bit of a dichotomy going on right now. Now, if we start from the top down, we can see that we have a strong trend on the monthly chart. This is not going to just reverse overnight. So for those people that are saying, oh my gosh, we have a double top, we're going to see, you know, S&P 2000 in 2024. I don't think that's going to happen in any kind of time frame that we care about. That's the equivalent of trying to do a 180-degree turn on a aircraft carrier going at flank speed in the Pacific. It's going to take miles and miles for this chart to turn around. So that's why I have rule number 1 of fractal energy trading, which says that larger time frames dominate the trend. So we should expect to see that dominant trend continue to the upside. Now, that doesn't mean it's going to be there 365 days a year. The problem that we get into the weekly chart here is that this straight line 700-point move has now moved the weekly chart into exhaustion. And the dichotomy that I have here is that the daily chart over here has now done the hard work. It's actually been very nonlinear price action over the last 2 weeks. It now is fully charged up. So which way is this energy going to go? This is like the child in the back seat on a long family trip, which bouncing off the walls wants to go somewhere. So can it go to the upside? Maybe, but I think the potential is very limited for the price to break to the upside. I think there's more potential for it to go to the downside because that would give some relief to the weekly chart. So what I see potentially happening here, and I hate to get into predictions because predictions usually are a fool's errand, but typically when I see something like this, when we have this dichotomy between the weekly chart and the daily chart over here, is that what makes sense for both of these to be happy is the daily chart actually starts to rally, and then everybody gets excited because, oh, this is all the pullback that we're going to get. We're just going to get a 2% pullback, and then we're just going to go into new highs. But I think what happens is once we start on this bounce from here, something will happen over the next week or two to throw open the trapdoor in the market, and then we end up printing a lower high and a lower low. So we actually get a change in polarity to a downtrend on the daily chart, which allows this weekly chart to pull back maybe as far as the swing test here at 4,600, maybe a little bit lower than that. And it allows the energy to recover. Range expansion goes to range contraction. We're right now in a range contraction phase on the weekly chart, and we could have a 200-point swing from this. And it's very, very normal. And the monthly chart's not even going to notice it at all. It's still going to continue chugging along to the upside. So this is the dynamics that happens at multiple time frames. This to me is the most logical outcome from this, is an attempted and aborted bounce on the daily chart leads to a lower high and leads to somewhat lower prices, maybe a 4 to 5% pullback over the course of the month of January into early February before the main trend will take over and resume once again. And that's it for my market minute for this weekend. Thanks for listening, and we'll see you in the next one.